We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP CHF. We are on the 12-month time frame. Price action, last candle to right hand side is a very small bullish green candle. Look like it's a bit of a spike up to the high. Matter of fact, it looks like a doji cross. So it's inside the second last candle. So we're going to see if it's going to respect the second last candle with that drop down with that wick to push up, unless we see that consolidation, because it is within that second last candle, or if that market's creating a pattern to drop down further for multiple pushes to that top of that resistance. Current price sitting at 1.11966. So if price work his way up, what are we looking for price to go for? Just starting off in that area, we're looking for price to engulf that second last candle, which would be the highest area of that wick, nearing the numbers of 1.25443. Price pushes down, you're looking for price to tag that second last candle of that bottom of that wick, which would be near the numbers of 1.01390. So we can see that market is in a range, consolidating sideways until that market breaks out to upside or downside. Then we can see the pattern that's being formed. So to give you an idea on how it can look. So if you're looking at an overall structure, and because we have a spike down to a low with the candle first started off at, so identify as a first leg, second leg, market came right back down for that third. So we're going to see if it's going to respect the push out. If so, market's coming from an overall double bottom. Now price pushes down further. You break down the chart as in we got the high. We can clearly see where the low is at. We have a midpoint, and then you ask yourself where the market's coming from the high. At the high, what did we receive? The first, second, third, fourth, a double top. And then we have multiple retests across the board. So let's identify as first, second, third, fourth, retest 1, retest 2. So it's a quadruple top, and then the market consolidated sideways within the last few candles in the market. So price action is currently coming from a double top, a quadruple retest, and now we have that consolidation waiting for the pattern to identify itself for the breakup to the upside or to the downside. Walking down to the 6-month time frame. So price action on the 6-month time frame, it's reading same as well, bullish green candle, doji style. So the doji inside the second last candle being a spike down to a low. So this market is respecting this area. So it can respect the area of near the second last candle body, or it can respect that low area here, and this will be like the high. So if it's respecting, the market can identify the respect, work its way up for that support. Let's identify as a retest, which will be identified as a break. The retest, the market drops down. Walking down to the 3-month time frame, so price action on the 3-month time frame is reading as a bearish red doji. Second last candle doji, third last candle push up to a high bullish green candle, fourth last candle spike down to a low. So the primary candle we're looking for the market to break out of is the fourth to last candle, which is the bodies of that candle. And we did receive a spike down to a low, so it is reading as that first, second, third. So the third leg would be the price action. If it pushes up with the bullish green candle and engulf the fourth to last candle, the market will see that W formation. If not, it'll identify as a break, a retest, and the bearish red candle would drop down and engulf the previous candles, but may not drop all the way down, because you want to see eventually, first we want to see price action engulf out of the fourth to last candle body, and then we're going to see if it's going to take out of the bottom of the support, or maybe the top of that fourth to last candle high. So we have a high, a midpoint area, and a low. Walking down to the monthly time frame, so price action monthly time frame reading as a bearish red candle, very small. Inside a whole bunch of dojis and spike ups to the high. So the primary candle we're looking at for the breakout is first, second, third, fourth, fifth, sixth, seventh, eighth, the last candle in the market of that body. So this is where we see the consolidation. Patterns trying to be formed. So we have a spike down to a low with the bearish red candle. So we can see that market trying to create some structure off the second level. If so, we'll see that first, second, fourth. Let's follow the bullish green candle for the breakout. Market's coming from a double bottom and a retest or a triple bottom. Walking down to the weekly time frame, so price action on the weekly time frame reading as a bearish red candle. So we already know that the market's consolidating with the last few candles in the market. So that's that consolidation that we've seen previously. At second levels, we can see multiple touches. So let's see how many touches: first, second, third, fourth, retest 1, retest 2, retest 3, retest. We're going to see it's going to break out. So if so, market's coming from price second, third, 1, 2, 3, 4, 5. So that's already 5 pushes to the bottom, retest, and the market pushes up. Most of the time the market does 5, maybe 6 pushes to a bottom or a top before the breakout. So with this level, I think it's about 5 touches to the bottom, about 5, 6 touches, 1, 2, 3, 4, 5, about 5 touches to the top, 5 pushes to the bottom. So the market should be breaking out of that area soon. It can go for 6 to the top, 6 to the bottom, and you'll finally have the breakout, but it can be happening soon because we already have about 6 touches within that consolidation area, 5 touches. Daily time frame, price action daily time frame reading as a bearish red candle inside the second last candle. So we're going to go tag the second last candle, and we're going to create a zone going a little bit above, it's going across the zone. So we're looking for the breakout. So we can see currently the market's consolidating. And where is it consolidating from? From a pattern. So if you see where that pattern is coming from, price action is in the zone. So when that market did spike that low, it did create the pattern of that first, second, third, fourth. That's a decline W. Market broke into the zone, trying to retest that zone. Don't know how far it's going to come down, but so far we do know that we are in the consolidation of that zone. So basically you're waiting for the breakout to the top of that zone or to the bottom of that zone. If it breaks above, then we'll see the first, second, third, fourth retest, and the market pushes up and break out. So markets will be coming from a double bottom and a retest. But if it pushes down, we'll talk about that on the 4-hour time frame. So if it pushes down, it'll identify as first, second, third, fourth. Okay, double top, retest, market went into the zone, finally broke, came back for a full retest. Now if it pushes and breaks out, it's coming from a double top and a double retest, altogether quadruple top to that high. Walking down to the 3-month time frame, let's zoom into price, see what's happened. So price action on the 3-hour time frame is a bullish green candle. So what's happening is it's trying to create some momentum off the bottom of that midpoint. So it gauged the top of the SR line to the bottom of the, top of the zone to the bottom of the zone. We can see that market broke below the zone. So it could be identifying as the market broke, came back to retest, but went through the zone. So it is on the opposite side. So it broke again, retest. Now it could drop down further. It can consolidate sideways unless price action breaks above, engulf the second last candle. That means the market identified as a break and retest, which would be coming from an overall pattern of that midpoint for that first, second, third, fourth retest, and the market pushes up to the top of that zone. Walking down to the 2-hour time frame, still receiving that consolidation, spike up to the high with price action. So this market is a consolidation, last 3 candles. So what's happening is that the market broke into it, retested, consolidated sideways. So we're going to see if it's going to respect. If so, it create that W formation and push up, unless it engulfs the second and third to last candle, work its way down. So which will identify a break, a retest, and the market drops down. Walking down to the 1-hour time frame, so price action 1-hour time frame is a spike up to the high. So this market could be dropping. The reason why is because price action high came from a double top. We have that first, second, third, fourth. Okay, so price action basically came back to retest the midpoint line or near that midpoint line, as we can see, and it could be dropping down further, or it could respect the area of support and then work his way back up. So still looking for the engulfment on a 1-hour time frame towards the second last candle, towards that top side or bottom side. Price action reading as a spike up to the high, so it can follow with another bearish red candle to at least drop price near the second last candle, which would be near the numbers of 1.11811. Okay guys, GBP CHF.